Hi everyone, in this video we'll be going over A-Level Accounting 2023 May-June Paper 1-2. This is a multiple choice paper which consists of 30 questions and each of them will be of 1 mark, and the total time limit for this paper is 1 hour. And in this video as well, we'll be attempting to solve this paper under 1 hour. So without any further delay, let's get started. For the first question, we need to figure out which row correctly describes an advantage and a disadvantage of a partnership. So for option A, we can see that the advantage is limited liability, but this is incorrect because remember that in a partnership business, the partners will have unlimited liability. So this is incorrect. The second one is access to more expertise. This is true because 2 or more people will be coming together and forming a partnership, contributing their own specific skill set or expertise. Let's have a look at the disadvantage as well. It is unlimited liability. Like we said before, in a partnership, partners will have unlimited liability, which will act as a disadvantage. So the correct answer is option B. Let's have a look at the remaining options as well. For C, we have limited liability, which is again incorrect. And for D, we have indefinite lifetime of business. This is also incorrect because in our partnership agreement, we can agree upon the number of years in which the partnership will run. So again, our correct answer will be B. Let's move towards the second question. An asset is purchased on credit by a business. What is the effect of this transaction on the accounting equation? So for assets, we're purchasing it, which means that the value of our assets will definitely increase, which is given in all 4 options. Then let's have a look at liabilities. The key word here is purchased on credit, which means that we are yet to pay for this asset, which acts as a liability, which means that our liability will also increase, which is given in option C and D. Then the third one is capital. We're not using any capital, and remember that a transaction will have twofold effect, and in this case it is increasing assets as well as liability. So there will be no change in capital, which is given in B and D. So the correct answer for all 3 is given by option D. Let's move towards the third question. Which items relating to new manufacturing equipment are capital expenditure? So the first one is cost of the equipment, which is definitely a capital expenditure. And remember that capital expenditure are the non-recurring expenses. So it does not occur time and again. Then the second one is delivery cost of the equipment, which is also non-recurring because once we deliver the equipment, it does not need to be delivered time and again. Then the third one is staff training cost to operate the equipment. Now remember that when new staff is introduced in the business, staff training must be done so that they might gain knowledge on how to operate the equipment, which means that this is a recurring expense. So we cannot really categorize this as capital expenditure. So the correct answer is 1 and 2, which is given in option A. Let's move towards the fourth question. The financial year of a business ends on 31st December. At the beginning of the financial year, the following payments were made in respect of a new machine. So we have our purchase cost, which is 60,000, and installation cost, which is 10,000. Again, remember the capital expenditure. We include all of the non-recurring costs as part of the capital expenditure, and installation cost is also non-recurring because once you install that particular machine, it does not need to be installed time and again. So the total cost should be our purchase cost of 60,000 plus the installation cost of 10,000, which is 70,000. So we value the cost of the machine at 70,000. Then it was discovered that the installation cost had been incorrectly treated as an expense. So instead of including this as a capital expenditure, we included this as a revenue expenditure, which means that we charged 10,000 as an overhead in our statement of profit or loss. It is the policy of the business to depreciate machinery at 20% per annum using the straight line method. Now we need to figure out the effect of this error on the profit for the year. Okay, first of all, let's have a look at our correct entry. So remember that if we entered this correctly, our cost of the machine should have been 70,000 and we would have charged depreciation on 70,000. So that's the cost of 70,000 multiplied by the rate of depreciation of 20%. This would give our correct depreciation to be 14,000. And this 14,000 should have been treated as an overhead in our statement of profit or loss if we would have entered this transaction correctly. Now let's have a look at the entry that we made, which is the incorrect one. We only included 60,000 as the cost of the machinery. So the depreciation will be charged on 60,000. And then we just multiply it by 20%, which is the rate of depreciation, which gives our incorrect depreciation to be 12,000. And also remember that we treated 10,000 as revenue expenditure, which means that this was also treated as an expense in our statement of profit or loss. So the total expense that we charged is 12,000 plus 10,000, which results in 22,000. Now, the overhead that should have been charged was 14,000, but we incorrectly charged it as 22,000. So we can definitely see that the overhead was overstated. Let's figure out the overstated amount. That is just the difference between these two overheads. So that's 22,000 minus 14,000, which results in the value of 8,000. And remember that we need to figure out the effect of this error on the profit for the year. So we've already discovered that our overhead was overstated by 8,000, which means that our profit will be understated. And it will be understated by this very same amount. So we're looking for 8,000 understated, which is given in option B. Let's move towards the fifth question. The motor vehicles at cost account had a balance of 90,000 at the beginning of the year on 1st January. On 1st September in the same year, the following transactions took place. A motor vehicle was disposed of and the vehicle had been purchased in the previous year for 21,000. This is the cost of that disposed vehicle. Then a new motor vehicle was purchased at a cost of 24,000. Now depreciation is calculated at 20% using the straight line method, and depreciation is charged on a month-by-month basis for each month the motor vehicle is owned. Now we need to figure out the depreciation charge for the year ended 31st December. Okay, remember that at the beginning of the year we had motor vehicles with the cost of 90,000, out of which 21,000 worth of vehicles were disposed. So the remaining amount is just going to be 90,000 minus 21,000, which results in 69,000. Okay, and then there was also addition of new motor vehicle which had the cost of 24,000. Now we just need to figure out the depreciation for these three costs. Remember that the vehicles worth 21,000 were disposed on 1st September. But for the current year, this particular vehicle was used for the months of January, February, March, April, May, June, July and August, because on 1st September we were disposing it. Then again, the new motor vehicle was purchased on 1st September. So the number of months this new motor vehicle was used is just going to be September, October, November and December. So we used vehicles worth 21,000 for 8 months and vehicles worth 24,000 for 4 months. And for the remaining vehicles worth 69,000, we used it for the entire year. Now we just need to figure out the depreciation for these three motor vehicles. Let's start with the one which had the cost of 69,000. We're just using it for the entire year, so we can just multiply it by our rate of depreciation of 20%. Then let's move towards the disposed one, which had the cost of 21,000. Again, the rate of depreciation is 20%, but this would give our depreciation charge for the entire year. But we only use this particular vehicle for 8 months. So we just need to multiply it by 8 and then divide it by 12 so that we get the depreciation charge for 8 months. Now let's move towards the new purchased motor vehicle, which had the cost of 24,000. Multiply it by our rate of depreciation. Again, this would give the depreciation for an entire year. But remember that we only use this vehicle for 4 months. So we need to multiply it by 4 and divide it by 12. Now the depreciation for the vehicles with cost 69,000 is just going to be 13,800. For the disposed one, it's going to be 2,800. And for the new purchase, it's going to be 1,600, which gives our total depreciation to be charged for the year to have the value of 18,200, which is given in option B. That's the correct answer. Let's move towards question 6. Which error would not affect the agreement of the totals of a trial balance? So the first one is a credit note for 56 received from a supplier was entered in the book of prime entry as 65. So we can see that the error is being made in the book of prime entry, which is the error of original entry, which will not be reflected by the totals of a trial balance. So our correct answer is option A. Let's have a look at the remaining options as well. Goods taken for own use by the owner for 180 were debited to the cash account and debited to the drawings account. So remember that these are the goods taken for own use and not the cash drawings, which means that 180 should have been deducted from our purchases. Since we did not do that, our purchases would be overstated, which would be reflected in the totals of a trial balance. So this is incorrect. Then the third one is the discounts received total in the cash book was not transferred to the general ledger. If we did not transfer the total for discounts received in our general ledger, it just means that the trial balance will not include our discounts received, which will be reflected in the total. So this is incorrect as well. Then the fourth one is the purchases returns account was understated by 50 and the cash account was overstated by 50. Remember that these will affect on two different sides because purchases returns will be included as our income on the credit side, but cash will be included as our asset on the debit side. So we'll have a overstatement on the debit side. So debit side will have higher value of 50, whereas on the credit side we'll have a lower value of 50, which will create different totals for our debit and credit side, which will be reflected in the trial balance. So again, this is incorrect as well. Let's move towards the seventh question. A trial balance did not agree and the bookkeeper found the following errors. Okay, we need to figure out the opening entry in the suspense account. So I like to rectify these errors in the trial balance first, and then we can post it towards our suspense account. Let's have a look at our first error. A bank overdraft of 100 had been shown as a debit in the trial balance. So remember that bank overdraft is our negative bank balance, which is a liability, which should have been recorded on the credit side of our trial balance, but this was recorded on the debit side. Now, if you record it once on the credit side, it will just get cancelled out with the amount that we had previously entered on the debit side, and it will not reflect the correct amount for our bank overdraft, which means that we need to record it twice on the credit side to rectify this particular error. Now, if the correction of this error requires a credit entry in the trial balance, it just means that it requires the same entry but on the debit side in our suspense account. So I'm just going to record 100 and 100 on the debit side. That's our first error. Now for the second one, a cash purchase of 160 had been entered in the purchases account as 150 and the purchase was entered correctly in the cash account. Okay, so the only error here is that our purchases is being understated. So the understated amount is 160 minus 150, which is 10. Now, in order to rectify this error, we just need to include 10 as purchases. And remember that purchases will be recorded on our debit side because this is an expense. So we just need to record 10 on the trial balance on the debit side, which means that in our suspense account, we need to record 10 on the credit side. Alright, that's for the second one. Now for the third one, a telephone invoice of 400 had been debited to the insurance account. So this error will not be reflected in the trial balance because remember that both telephone invoice as well as our insurance is expenses, which means that this 400 is on the correct side, which is the debit side in case of trial balance. So we do not have to rectify this error. Now we just need to figure out the correct opening entry in the suspense account. So for that, let's figure out the total of the heavier side, which is the debit one. That's 100 plus 100, which results in 200. Now our balancing figure will act as the opening balance. So in order to figure that out, we just need to subtract this amount from the total. That's 200 minus 10, which results in 190. So the opening entry in the suspense account is just going to be 190 on the credit side, which is given in option A. Let's move towards the eighth question. A bank statement shows a credit balance of 8,360 and credit balance is a positive balance. Comparison with the cash book reveals the following errors. We just need to figure out the correct cash book balance. So for this, we just need to prepare our bank reconciliation statement, but we're starting with the balance as per our bank statement. So the format is just, we start with our balance as per the bank statement. Then we need to adjust all of our uncredited checks as well as outstanding bankings. So we just need to subtract all of our uncredited checks. And we need to add all of our outstanding bankings. And this will give our correct cash book balance. Alright, let's start with our balance as per the bank statement, which is 8,360. Now for the first error, we're told that bank charges of 124 have not been entered in the cash book. So this is actually an error that we need to rectify in the cash book. So it has nothing to do with uncredited checks as well as outstanding banking. So we can just completely ignore this. The second one is checks received from customers for 16,223 have not been credited by the bank. So these are the checks received, which means that this amount is for our outstanding bankings. And according to our format, we need to add our outstanding banking. So we're just going to add 16,223. Then for the third error, checks sent to suppliers for 18,725 have not been presented. These are the checks sent, which means that this amount for 18,725 is our uncredited checks, which we need to subtract. So that's minus 18,725. Now the total will give us our correct cash book balance. That's 8,360 plus 16,223 minus 18,725, which results in 5,858. This is a positive balance, which means that this will be on the debit side in our cash book. So we're looking for 5,858 debit, which is given in option C. Let's move towards the ninth question. Which statements are benefits of control accounts? The first one is they check the numerical accuracy of the ledgers. This is true because the total of our ledgers and the total of the control accounts needs to be the same. The second one is they help to identify missing entries in books of prime entry. Remember that missing entries in books of prime entry is error of omission, which will not be disclosed by the control account. So it definitely cannot be a benefit of control account. Then they provide details of individual transactions. So remember that while creating our sales ledger control account or purchase ledger control account, we include all of our credit sales and credit purchases as a whole. We do not attribute each amount to each of our customers or each of our suppliers. So they definitely cannot provide the details of individual transactions. This cannot be a benefit. The fourth one is they provide information for financial statements quickly. This is true because control accounts will give us the information for trade payables as well as trade receivables. So the correct answers are given by 1 and 4, which is given in option B. Let's move towards the 10th question. A company has obtained the following information for the year ended 31st December. We're given the opening balance on sales ledger control account, closing balance, discount allowed, and credit sales. We just need to figure out the amount received from credit customers. So we can just prepare our sales ledger control account. Let's start with the opening balance. It goes on the debit side. So that's 31,000. Then we have closing balance, which goes towards the credit side. So that's 35,000. Then we have discounts allowed, and discounts allowed will reduce the amount that we will receive from our credit customers. So this goes towards the credit side as well. Then we have credit sales, which we need to record on the debit side. That's 125,400. So the amount that we're trying to figure out is the amount received from credit customers, which will be recorded on our credit side of the sales ledger control account. In order to figure this out, we first require the total. Let's figure that out from the debit side. That's 31,000 plus 125,400, which results in 156,400. Now, in order to figure out the receipts, we just need to subtract these two amounts from the total. That's 156,400 minus 2,300 minus 35,000, which results in 119,100. That's the correct answer, which is given in option A. Let's move towards the 11th question. Which statement contains the correct accounting treatment for accrued income? Okay, so accrued income, we just need to add it to the income. And we need to show the exact same amount as a current asset as well. Because this is accrued income, which means that we have already earned this income, but we are yet to receive it. So this is definitely a current asset. We're looking for these two. So added to income, that's correct. Shown as a current asset, that's also correct. So the correct answer is given by option A. Let's move towards the 12th question. A business receives rent from letting part of its premises. On 1st January 2022, there was a balance brought forward of 1,000 in the rent receivable account in respect of 1 month's rent received in advance. So this is the rent per month. Then during the year ended 31st December 2022, the business received further amounts totaling 13,000 to cover the period from 1st February 2022 to 31st January 2023. Then a rent increase of 10% was introduced from 1st April 2022. Okay, I'm just going to create a timeline right here. So from January, February, March, till these 3 months, the rent is going to be 1,000 per month. Then from the months of April to December, the rent will be increased by 10%. So the new rent is just going to be 1,000. We're increasing it by 10%. So that's times 1 plus 10%, which results in the amount of 1,100. So the rent per month for April to December is going to be 1,100. Then the statement of profit or loss for the year ended 31st December 2022 incorrectly included an amount of 13,000 for rent receivable. Okay, so this is the incorrect rent receivable. Let's figure out the correct rent for the year. We already know that for the first 3 months, the rent will be 1,000 per month. So that's just going to be 1,000 times 3. Then for the remaining 9 months, the rent per month is just 1,100. So that will be 1,100 times 9. So the correct rent for the entire year of 2022 is just going to be 12,900. So instead of including this amount as our rent receivable, we actually included 13,000, which means our rent is being overstated. So that's 13,000 minus 12,900, which results in 100. So our rent is being overstated by 100. And remember that in this case, the rent is rent receivable. So it's an income. So if our income is being overstated, it just means that our profit will also be overstated by the exact same amount. So the answer that we're looking for is 100 overstated, which is given in option A. Let's move towards the 13th question. A sole trader's personal expenses had been paid out of the business bank account and included in the statement of profit or loss. What was the effect of this on the profit for the year and on capital? Okay, so personal expenses is being included as an overhead of the business, right? So there's an overstatement of the overhead, which results in understatement of the profit for the year. So that's given in option C and D. And for the capital, there will be no effect because we're talking about sole trader's personal expenses and not the drawings. So there will be no effect, which is given in A and C. The correct answer is given by option C. Let's move towards the 14th question. A business has a gross profit margin of 25%. The following information is available for the year. We need to figure out the purchases for the year. Okay, we're given the opening inventory, closing inventory. And remember that the formula for cost of sales is opening inventory plus purchases minus closing inventory. Now, in order to figure out the value for purchases, we first need to figure out the value for cost of sales. We'll use our gross profit margin. So what gross profit margin means is that 25% of sales revenue will be the gross profit, which means that the remaining percentage, that's 75%, will be our cost of sales. So the cost of sales is just the sales times 75%. In this case, the sales is given to be 200,000. So cost of sales is just going to be 200,000 times 75%, which gives the value of 150,000. Now you can just easily solve this equation. That's 150,000 equals to our opening inventory is 10,000 plus purchases minus the closing inventory is 5,000. So the purchases is going to be 150,000 minus 10,000 plus 5,000, which results in the value of 145,000. And this is given in option B. Let's move towards the 15th question. A partnership maintains separate capital accounts and current accounts. We need to figure out which statements are correct. The first one is that the capital accounts represent the retained earnings of the business. Okay, this is incorrect because we maintain the capital accounts for the partners and not the partnership. So one is incorrect. The second one is that the capital accounts show the total amount owed to each partner. So it does not really show the total amount because we also have to adjust the current account balances into our capital accounts in order to figure out the total amount owed to each partner, which means that second statement is also incorrect. The third one is that the capital accounts and the current accounts equal the net assets. This is actually true because remember our accounting equation, asset will be equal to our capital, and in case of partnership it will be plus the current balances as well plus our liabilities. So capital plus current account balances is just going to be asset minus liability, which is the net assets. So our third statement is correct. And the correct answer is given by option D. Let's move towards the 16th question. X, Y, and Z are in partnership, sharing profits and losses in the ratio 2:1. X is allowed an annual salary of 10,000. Y has made a loan to the partnership on which the partnership pays interest of 5,000 each year. Profit for the year before appropriation was 150,000. We need to figure out the total share of the profit for Z. Okay, first of all, we need to figure out the residual profit. We'll start with profit for the year before appropriation, which is 150,000. Then we need to subtract annual salary because the partnership will pay this amount. Then we are also given the interest on loan, but remember that interest on loan will be already adjusted while figuring out profit for the year. So we do not need to adjust it again, which means that our residual profit is just going to be 140,000. Now we need to figure out Z's share of the profit. So that is just going to be the total residual profit. And we can see that based on our profit sharing ratio, one part out of the total of 5 parts will go towards Z. So that's times 1 by 5, which results in the value of 28,000. This is given in option B. Let's move towards the 17th question. A company had sufficient balances in each of the share premium, general reserve, retained earnings account to issue bonus shares. Okay. During the year, bonus shares were issued. The directors decided to keep the reserves in their most flexible form. So the meaning behind this statement is that the first reserve that we need to utilize for our bonus share will be share premium. Then we can move towards general reserve, and then we can move towards retained earnings. So we first try to fund all of our bonus shares using share premium, and if the value in the share premium is not enough, we then move towards general reserve, and if the value in general reserve is not enough, we finally move towards the retained earnings in order to fund the bonus shares. Now, which ledger account will be debited on the issue of the bonus shares? Okay, while issuing bonus shares, remember that our share capital will increase, which means that in our ledger for share capital, we will credit this transaction. So for share capital, the ledger will include the credit balance. And remember that these share capital will now be funded by our reserves, which means that the value on these reserves will decrease, right? So we need to debit these three reserves on the issue of bonus shares. But for the answer, we only need to choose one particular reserve. That is when we need to keep in mind this statement to use the reserves in their most flexible form. So the first reserve that we'll be utilizing is share premium, which means that the correct answer is also going to be share premium. That's D. Let's move towards the 18th question. X Limited had the following equity on 1st January. Okay, these are all of our opening balances. Then during the year ended 31st December, the following transactions took place. Okay, we just need to figure out the total equity at 31st December. Let's have a look at our first transaction. A bonus issue of 1 ordinary share for every 8 ordinary shares, and it is the company's policy to keep its reserves in the most flexible form. So remember that issue of bonus shares will not have any effect on the total equity because we're funding the bonus issue through all of our reserves. So we can just ignore this transaction. The second one is an issue of debentures for 150,000. Again, debentures are a long-term loan, which means that this will be categorized as our non-current liabilities, which will have no effect on the value of total equity. We can ignore this as well. Then a rights issue of 1 ordinary share for every 15 ordinary shares will be issued at the price of 1.60 per share, and the rights issue was fully taken up. Now, for this, we need to consider the first transaction because remember that the bonus issue will increase the number of ordinary shares. So let's figure out the number of bonus shares issued. We know that for every 8 ordinary shares, we will be providing 1 bonus shares. So for 1 ordinary share, we'll be providing 1 by 8 bonus shares. And we can see that the total value of ordinary share is 400,000 and the nominal rate is 1. In order to figure out the number of ordinary share, we just divide the value, which is 400,000, by the nominal rate of 1, which again results in 400,000. So now for 400,000 ordinary shares, the number of bonus shares will be 400,000 divided by 8, which results in 50,000. So at the date of this rights issue, the total number of ordinary shares that we'll have in our company is the initial 400,000, then the additional bonus shares. So the total number of ordinary shares will be 450,000. Now again, let's repeat the same process. So we can see that for every 15 ordinary shares, we'll be providing 1 right shares. So for 1 ordinary share, that's 1 by 15 right shares. And we have a total of 450 ordinary shares at that date. So for 450,000 ordinary shares, we'll be providing 450,000 divided by 15, which results in 30,000 right shares. So the value of right shares will just be the number of shares multiplied by the rate at which the shares are being issued, which is 1.60. So the value that we received by issuing our right shares is just going to be 48,000. This will be added to the equity. Okay, then for the last one, we have profit for the year ended 31st December, which was 120,000. And this will also increase the value of our total equity because profit for the year will be added to our retained earnings. So the total equity is just going to be, let's add the initial opening balances. So that's 400,000 plus 30,000 plus 10,000 plus 70,000. We also need to add our rights issue, which we figured out to be 48,000. Then we need to add profit for the year. This gives the value of total equity to be 678,000, which is given in option A. Let's move towards the 19th question. Which 3 key users of financial statements will be most interested in the statement of profit or loss? So remember that statement of profit or loss will disclose either the total profit for the year or the loss for the year. So the first user or first stakeholder that will be very interested in the profit or loss of the company is going to be the shareholders because they will receive dividend as part of those profit, right? Then the second stakeholder that will be interested in the profit or loss is going to be our government because each company will have to provide a certain percent of their profit or loss as tax to the government. So the second stakeholder is our government. Then the third stakeholder that will be interested in our profit or loss is the potential investors. Because people like to know whether or not the company is performing good before they actually invest in the company itself. So we're looking for shareholders, government, and then potential investors, which is given in option D. Let's move towards the 20th question. Raj, a supplier of goods, has calculated the following ratios from the financial statements of a possible new customer. Which ratios would help Raj decide whether or not to supply goods? So if he is supplying goods, then it means that he is supplying goods on credit, right? So the very first thing that he will be interested in will be the liquidity of the company. It means whether or not the company has enough cash holdings to pay Raj back. Then he will also be interested in trade payables turnover, because it lets him know the number of days that he will have to wait in order to get amount for the credit purchases that he made. I think that's all. So the first one is current ratio, which will definitely include our current asset, which will include cash, which is basically liquidity. And also remember that current ratio can also be categorized as a liquid ratio. So that's correct. The second one is non-current asset turnover. So it just shows how the non-current asset is being used in order to generate revenue. And Raj will not have an interest in this particular ratio because it does not let him know about the liquidity position or the trade payables turnover of the particular company. The third one is trade payables turnover. Again, that's the thing that Raj would be interested in because it will let him know the number of days that he will have to wait in order to get the payment for the purchases. Then the fourth one is trade receivables turnover. It has nothing to do with supplier, so Raj will definitely not be interested in it. The correct answers are 1 and 3, which is given by option B. Let's move towards the 21st question. The following information is available for a business for the year ended 31st December. Okay, 90% of revenue is from credit sales. 80% of purchases are on credit terms. We need to figure out the trade payables turnover. So the formula is just going to be our trade payables divided by the credit purchases times 365 days. Okay, so trade payables is just the amount that we owe towards our credit suppliers. So that's 46,000. And we're given purchases right here, but we only require the credit purchases. And we're also told that 80% of purchases are on credit terms. So the credit purchases will be 600,000 times 80%, which results in the amount of 480,000. So that's divided by 480,000 multiplied by 365. This results in 34.98, but we're figuring it out in days, so we just need to round it off as 35 days. That's given in option C. Let's move towards the 22nd question. The table shows information from a company's financial statements. We need to figure out return on capital employed. So the formula is profit from operations divided by capital employed multiplied by 100%. Okay, profit from operations is right here, that's 11,000. And capital employed is the sum of our equity plus the non-current liabilities. Okay, revenue, gross profit, profit for the year. We are given information regarding assets and liabilities. Okay, so if you remember our accounting equation correctly, that is just the current asset plus non-current asset. It will be equal to our equity plus non-current liabilities plus current liabilities. We're looking for equity plus non-current liabilities. We're given current assets right here, that's 50,000. We have our non-current assets to be 59,000. We're trying to figure out equity plus non-current liabilities, and current liabilities is given to be 40,000. Okay, so this gives our equity plus non-current liability to be 50,000 plus 59,000 minus 40,000, which results in the value of 69,000. Okay, so that's 11,000 divided by 69,000 times 100%, which results in the value of 15.94%. And that is given in option D. Let's move towards 23rd question. A company incurs a semi-variable cost per employee hour worked. If hours worked exceed 10,000, an extra fixed administrative cost of 600 will be incurred. Okay, we need to figure out the total administrative cost when 12,000 hours are worked. Okay, we need to use these information in order to create two different equations. Okay, so for 8,000 hours worked, we have variable cost as well as fixed cost, and this results in the total administrative cost of 20,000. Similarly, for 10,000 hours worked, that's times variable cost plus fixed cost, this will equal to the total cost of 24,000. And do not get confused, we should not be adding the extra fixed administrative cost of 600 for this one because it's 10,000 hours, not hours exceeding 10,000. Okay, now let's subtract the second equation from the first one. That's 8,000 minus 10,000, so that's minus 2,000 variable cost. It gets cancelled, equals to minus 4,000. So our variable cost is just going to be negative 4,000 divided by negative 2,000, which results in 2. Now we're trying to figure out the total administrative cost when 12,000 hours are worked. So that's 12,000 multiplied by the variable cost of 2. We also need to figure out the fixed cost. So let's use the first equation. 8,000 times, we just figured out the variable cost to be 2 plus fixed cost will be equal to 20,000. So that's fixed cost equals to 20,000 minus 16,000, which results in 4,000. So our variable cost is 4,000, and in this case we should also be adding another extra fixed administrative cost of 600 because the hours is 12,000, which exceeds 10,000. Alright, now this gives the total administrative cost to have the value of 28,600. That's given in option A. Let's move towards the 24th question. Which costs are charged to individual jobs in a job costing system? Okay, so we need to include all of our direct costs. So this includes both the direct material as well as direct labor. Then we also need to include the production overhead cost. So we're looking for these three costs. For A, that's direct labor plus direct materials. It does not include production overhead, so this is incorrect. For the second one, we have direct labor, direct material, as well as production overhead, which is the cost that we're looking for. That's the correct answer. Let's move towards the 25th question. A business absorbs its overheads on the basis of direct labor hours. We're given the following information for actual as well as budgeted. By how much were overheads overabsorbed or underabsorbed? So in order to figure out the overabsorption or underabsorption, we need to compare our actual overhead and budgeted overhead. But remember that our basis should be the same. So we need to compare it based on the same number of labor hours. So actual overheads is based on 13,100 hours. So we need to figure out the budgeted overheads on the same basis. So we can see that for 12,400 hours, our budgeted overheads was 620,000, which means that for 1 hour, it will be 620,000 divided by 12,400. We're trying to figure it out for 13,100 hours. So that's 620,000 divided by 12,400 multiplied by 13,100, which results in the required budgeted overhead to have the value of 655,000. Okay, so our actual overhead was 640, whereas the budgeted is 655. So clearly the budgeted is greater than the actual overhead, which results in overabsorption. And the amount for overabsorption will be the difference between the actual and budgeted amount. So that's 655,000 minus the actual of 640,000, which results in the value of 15,000. So the correct answer is 15,000 overabsorbed, which is given by option A. Let's move towards the 26th question. Why might a business use absorption costing? So the first one is to calculate inventory valuation for financial statements. This is true because absorption costing will absorb all of our overheads so that the cost of each unit will include every cost incurred. So it can definitely be used to calculate the value for inventory. The second one is to calculate selling price by adding profit to total cost. Like I said before, the total cost will include all of the overheads as well, which means that we can easily calculate the selling price by adding profit to it. That's correct as well. The third one is to include all production costs for the units produced. Again, this is true. So the correct answer is given by option A. Let's move towards the 27th question. Gareth makes and sells bread. He has calculated how many loaves he needs to sell each day in order to break even. Which factor helps him accurately analyze his break-even point? So for the first option, all of his production is sold on the day it is made. This is true because remember that break-even point gives the number of units that we need to sell so that we do not have to bear a loss but will not gain any sort of profit as well. In order to be in that position, all of his production needs to be sold. So A is the correct answer. Let's have a look at the remaining options as well. He sells several different types of bread. This is incorrect because remember that for break-even point, we utilize marginal costing, and marginal costing can only be done for one particular product. We cannot analyze different products at the same time. The third one is seasonal effects cause the cost of flour to vary. So cost of flour might act as our variable cost or the fixed cost, but remember that the assumption for marginal costing is that the variable cost as well as the fixed cost will remain constant over time. This is incorrect as well. Then the fourth one is selling prices are reduced at the end of the day. Again, this is incorrect because this violates our assumption for marginal costing, which states that the selling price should remain constant. Let's move towards the 28th question. A business has the following information about a type of product. We're given the current production and sales, we're given unit selling price, we're given unit variable cost, as well as the total fixed costs. What will happen to the break-even point and the margin of safety if fixed costs increase to 32,000? Okay, first we need to figure out the break-even point and margin of safety at this fixed cost. So for 25,000, let's figure out break-even point. That is just going to be 25,000. That's the fixed cost divided by contribution per unit, and that will be selling price minus variable cost, which results in 8. This gives the break-even point to be 3,125 units. Now we also need to figure out margin of safety. That will be the total production minus break-even point. Production is given to be 8,000. So that's 8,000 minus 3,125, which results in 4,875 units. Okay, now we need to figure out the same thing for 32,000 fixed cost. So our break-even point will be 32,000 divided by 8, which results in 4,000. And our margin of safety will be 8,000, which is the current production, minus break-even point of 4,000, which again results in 4,000. Now we need to compare the values. So previous break-even point was 3,125, now it's 4,000. So break-even point has increased, and the increment is of 4,000 minus 3,125, which is 875. For margin of safety, previously it was 4,875, now it's 4,000, which means that it is being decreased. So the decrement is of 4,875 minus 4,000, which results in 875. So remember that the increment for break-even point should be equal to the decrement for margin of safety, because break-even point plus margin of safety will be equal to the total production. So if one increases, then this must decrease in order to remain at the same total production. So we're looking for increase by 875 and decrease by 875. That's given by option C. Let's move towards the 29th question. A company manufactures 3 products, X, Y, and Z. The table provides per unit information concerning the 3 products. All 3 products are made from the same material. If the material is in short supply, which manufacturing pattern will maximize profit? So we're just trying to figure out the order of priority. Okay, for that, we first require our contribution per unit. That is just the selling price minus variable cost. For product X, that will be 100 minus 40 minus 20 minus 50, because these 3 are the variable cost and this is the fixed one, so we do not need to include this. So that's 100 minus 40 minus 20 minus 15, which results in 25. For Y, that's 120 minus 45 minus 25.5 minus 18, which results in 31.5. For Z, it's 130 minus 48 minus 29 minus 20, which results in 33. And always remember that while figuring out our order of priority, we just need to divide the contribution by the scarce resource. And in this case, the scarce resource is our material. So we just need to divide these amount by the direct material cost. So that's divided by 40 for X, divided by 45 for Y, and divided by 48 for Z. Now this gives the value of 0.625 for X, the value of 0.7 for Y, and the value of 0.6875 for Z. And the order of priority, we go towards higher to lower. So we can see that the highest is for product Y, so that will have our first priority. Then the second highest is Z, so that will have our second priority. And the last one is X. So we're just looking for Y, Z, X. That is given in option B. Let's move towards the 30th question. Why would a business use cost, volume, profit analysis? So the first one is to act as a basis for long-term planning. This does not provide a basis for long-term planning. It is only used for short-term planning, so option A is incorrect. The second one is to assist in the valuation of inventory. We cannot really value inventory using cost, volume, profit analysis because, as the name suggests, we're basically looking at different level of activities and its cost, volume, and the profit. So option B is incorrect as well. The third one is to decide which costs are fixed and which are variable. This will be provided by our marginal costing, not by cost, volume, profit analysis. So this is incorrect as well. And the third one is to understand the relationship between sales volume and profit. This is true because we can see the volume and profit right here. Okay, this concludes the paper 1-2 for 2023 May June. If you found this video useful, make sure you like the video and leave a comment below, and make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.